Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, March 7th, and great to be here with you guys this morning. Carlos, Iman, Mark, Peter, Pete's in the house, Pooja's in the house. Great to see you guys all here ahead of the BOE release, which is on tap at 10 o'clock today. Lots to discuss. Obviously, some news coming out of the White House right after the close of markets yesterday. I put in my note, basically Gary Cohen, which is the Trump's chief economic advisor, his departure may be a little bit of a concern for the market. Let's just put it that way. Okay, he was behind the tax cuts. He was behind also the big push to deregulate markets, and really is instrumental in some of the policies that have been enacted already. Whether he's leaving because of this tariff deal and his inability to move the president's sort of stance on it or not, guys, we can go into a whole debate on that, right? From the market standpoint, there does seem to be a little bit of a risk sell-off. Obviously, you saw Asia trade pretty heavy in overnight trade. We were down about 1% on the Hang Seng, S&P X 200. Australia was also down better than 1%. U.S. equity futures are also trading heavy. Okay, so we're down 215 points on the S&P, about 16 points on NASDAQ, or on the S&P rather, and about 32 points on NASDAQ. But the point being, that risk off is kind of perpetuated by some of the tariff talks that we've seen. Trades of interest in this type of environment. Obviously, we'll look at the DXY first on tap today, but I also really want to continue to follow gold. I presented that trade to you on Monday, and I do think that trade is going to continue to be of utmost importance, specifically as we get into Friday. Guys, there's still a ton of event risk on tap. Obviously, we have the BOC today, which will go over dollar CAD, but ECB is on tap. We still have NFPs. We still got the BOJ. So a lot of things to consider as far as event risk is concerned. So for the menu, obviously DXY, we'll talk about dollar yen, Aussie dollar, which we're currently in on the swing side of trades, and I'm still holding a position on that as well. Euro yen, a trade that we've been following here in the webinars very closely as per your requests. And Euro CAD finally came into an area of resistance. I'm not fading it yet, but it is coming into a major area of resistance that you want to be very mindful of. So from last night's update. Also, we want to touch on dollar CAD ahead of the BOC. I haven't done anything on Aussie yen recently, but the levels still remain pretty clear. We'll talk about Euro CAD, or Euro Kiwi, excuse me, and obviously we'll talk about the gold trade. And from Sunday's update, we'll circle back and talk about Euro dollar. So that's what's on the menu for today. If you have any questions or specific trade setups you didn't hear mentioned that you'd like to review, as always, throw those on the message board. And let's jump right in. Okay. First things first, guys. Here's what we looked like last night, and here's what we were looking at on the DXY. So recall from earlier in the week on the Sunday update, here's what the DXY looked like on the daily charts. We were talking about the fact that last week, we fizzled out right ahead of the low we closed from 2017. And if the analog that we've been following from 1994, I'm not going to show it to you again, but if it does continue to materialize, we should be looking for a drop into support, if not another low, before we continue higher. So that was kind of the focus that we talked about early in the week. An outside day reversal off resistance also is a very exhaustion type of signal. Let's just put it that way, is an apparent exhaustion signal, and continues to suggest that the risk is lower. Okay, here we are a couple of days later after that outside day reversal. You're seeing the markets continue to slide. Yesterday, we did break below near-term support. Here's what the pitchfork looked like earlier in the week on the Sunday open, ahead of the market open. We said as long as you stay below 90.11, you got to be kind of use caution here. Look for that drop into 89.59. And this is the break that if we do, clear, would shift the focus to the downside. Easy put, okay? Yesterday, here's what it looked like. We rallied right into 90.11. Obviously, we failed there again. Downside break of this region keeps the focus lower. Now we're recovering a little bit. And as I said, looking for resistance at this confluence region, bearish in validation, 89.91. Okay, guys, if this is the weekly opening range, that's the break. Your weekly opening range low should be initial resistance on the kickback. So even if this does spike a little higher, I'm largely looking for this thing to remain under pressure. If you look at the momentum signature, resistance at 50, that's as bearish as it gets, multiple breaks into oversold. So the focus, again, in my humble opinion, still has the risk weighted to the downside. Here's what the DXY looks like now. Okay, made it back below on the daily chart, made it back below that slope that we've been following, that nice pivot in price. Intraday, okay, there's that confluence break yesterday. Here's what we looked like yesterday right at the open of Asia. So you're seeing a little kickback back and forth here. Even if we spike as high as back to former lower parallel support, now resistance, as long as you stay below 89.91, I'm looking for the next downside drop. Now, levels of interest on the downside for DXY, if this does materialize, the 618 retracement, 89.28, just a very basic and objective measured move of the advanced. More importantly, the 2018 low day close that we made last month right here comes in very close to the February open. That's basically the 89 handle. Okay, last night it was a perfect confluence with channel support. Remember, I leave these dotted lines just because it's a very low conviction slope, right? We only have 2 points of reference. And on the downside, this is just a parallel. We don't have conviction on it yet. So I don't want to necessarily blindly follow this slope, but that would converge on, at this point, that 786 retracement, again, right back down here at 88.83. So all things held constant, still looking lower, sub 89.91. If this break is legit, look for acceleration towards 89.28 today on the DXY. Now, again, just to bring in the geopolitical environment, if the tariff talks do continue to kind of propagate, a couple things of why that would be bearish to the dollar. Obviously, the implications for the domestic economy would be there, whether it's higher costs passed on to consumer, whether it's pressure on the labor market in the steel and aluminum markets. Keep in mind, the last time we saw tariffs like this, guys, which weren't actually quite as aggressive, were from the Bush tariffs that we got. And on the back of that policy change, there was actually a contraction of about 200,000 jobs in those specified markets, okay, aluminum and steel. So we have to keep in mind that, while the broader concept of what he's trying to do certainly does hold merits, the implications are for, basically a hit, at least near term, in those markets domestically. What that means for the dollar is that will be likely a headwind for the Fed to be able to normalize rates. So obviously we talked about the fact that tax cuts have been a tailwind, and certainly that further allows the Fed to have more flexibility to begin to tighten or at least normalize at a faster pace. But if we get these kind of roadblocks or these wrenches in the road, there's a likelihood, obviously, that that'll kind of steer the Fed away from a fourth hike this year, maybe 3. And again, those interest rate expectations getting kicked out further, may be what we need to see that dip in the dollar. So kind of putting the pieces of the puzzle together of what the current fundamental environment is saying based on what we're seeing here in price. Again, risk is for a move lower, well below 89.91. Any questions on the DXY? Levels remain unchanged from yesterday, pretty clean. We'll continue to track this one, see if it moves lower. What are the implications for the euro? We'll go over that in a moment. First things first, though, I do want to just bring up some basic setups that are kind of pending. No action in quite yet. Here's dollar yen. Another one that played out perfectly. I mean, we came into the start of the week. Here's what dollar yen looked like on the Sunday update before we even opened the markets. Dollar yen was hovering right below that median line. Okay, we had our bearish invalidation at 106.38. So as long as price stayed below 106.38, we'll continue to favor the short side. Well, lo and behold, yesterday we came right into that key level, 106.38, held as resistance on 2 attempts. The move lower came right back into the May lows. Also, the weekly, weekly and monthly opens. Okay, so what does that mean? Well, basically at this point, you have a very clear-cut weekly opening range below resistance. So you have a very clear-cut range. If we break to the downside, look for resumption. 104.32 is a conservative target. Okay, I know Jamie's looking at a square root figure at 104 and change, 104.15, I think you noted. And just below that, you have a 764 retracement at 103.48. But largely, this is the first level I'll be looking at, that basic slope support for the current formation we've been following. Here's dollar yen now. Okay, the daily chart, nothing really to update on here. Again, there's those May lows. from this is 2016. And there's that 618 retracement. That's from the advance off the 2016 lows. So really clean as far as the range that we're looking for. A downside break. Look for resumption. There's 104.32. That's just a basically the highs from September of 2016. Conservative target, but also converges on that parallel. Intraday levels remain unchanged as well. Okay, here's your weekly opening range. Now, in the event this breaks to the upside, the only thing I would be looking for, I wouldn't want to necessarily try to play the long. I think you'll be chasing at that point as you break into new weekly highs. But if it does, look for the median line to offer some sort of tell on price. The median line has been very fruitful in this formation. Let me zoom out to a 240 real quick. Okay, here's the median line extending off the highs from November of last year. Pivot, resistance, support, 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 break, acceleration, resistance, acceleration. A little messy here, but resistance, resistance. If we break the weekly opening range, that's the risk, a rally back into 107. All things held constant, I'm looking for a break of this range. Favor a downside break, obviously for an extension to 104.30. And that's pretty much the game plan for dollar yen. Now, remember, we've been following, I just want to show you this, the 10-year, right? And yields on the 10-year, what the TNX has been doing. And I just want to, continue to bring this chart into focus, guys. The correlation with yields and dollar yen is not something to be taken lightly. Again, yields have stopped after a massive, insane run to start the year, right? People were going nuts as we were going to fresh 4-year highs. But that multi-decade 1994 channel resistance has continued to offer, or has continued to cap the advance in yields. Again, basically putting a floor on prices. Okay, also within the confines of the current uptrend, you have the median lines here, just basic parallels, extending off the highs, also giving us resistance. So keep a close eye on this for any assertive moves in dollar yen as well. But the levels, I think, remain pretty clear here. Any questions on dollar yen? BOJ is on tap. NFPs are on tap. U.S. data, typically a big mover for yields and the yen. So with both of those event risks really mounting the end of the week, keep the powder dry on dollar yen. The abomination is likely to get much more volatile as we get through the week. So that's number 2. Any questions there? All right, here's Aussie, number 3. So we're currently involved on the swing side in Aussie. I'm holding a position from last night's dumperoo as well. I think this was a gift. Basically the swing side had entry here. Jamie had on the swing update. Intraday, we've been watching this since yesterday's webinar. Basically here's the thing that happened, guys. You got some. Well, let me take a step back. Obviously, the onset of this decline, if you look at time, was basically right after the U.S. market close. When you heard that news of Gary Cohen resigning. Now, that was propagated further by some commentary that came out of the RBA. And the major commentary that came out of the RBA was basically slamming, again, the tariff talks. Literally, as those comments were coming to the wire, I was messaging Jamie saying, watch out, because this guy's saying some random stuff about how this is really, there's no benefit to it, and yada, yada. Every country is going to come out against it. And again, it's not free trade friendly, right, at the end of the day, whatever justification may be behind it. But long story short, those comments from the RBA fueled this decline. Then that was further propagated, and this is the thing I want you to pay attention, is that we got a weaker than expected print on Aussie GDP. Aussie GDP printed at 0.4% quarter on quarter for the fourth quarter. We were expecting a print of 0.5. Okay, so it came in slightly weaker than expected. Same thing on the year on year, came in at 2.4 versus expected 2.5. So look, there were slight upward revisions to the previous quarter's release, but the point being is that even that bad news, with the RBA coming out and saying this is not good, the tariff talks can be a real risk, and expect reciprocal type action and all that threatening talk. And then you also got on top of that weaker than expected GDP, but you still couldn't see dollar, Aussie dollar break below support. And to me, when the currency or the asset is able to buck bad news like that and continue to hold its own and even push higher, I think that's a tell. Okay, I think that's a tell. So for me, I'm still looking constructive in Aussie. At this point, my stop, where do I have it? Just below 77.50. Basically just below this region here is still where I have my stop. I think I'll be looking to take a little bit off if we get into 78.25 rather. I think I'd take a quarter off, maybe a third, bring stops to break even or at least below this low. I want to assess to see how this opens the US markets, but the game plan remains unchanged. Okay. One other thing that I was looking at yesterday, I did also highlight this on daily effects, was this. Okay, basic trend line. This was initial support, and although we spiked below on a close basis on this 2-hour chart, basically price was able to hold its own. Okay, so the emphasis break now is above 78.25, basically this region here, a little bit bigger of a zone into the 35 region or so that you need to clear to get resumption, at least for the near-term uptrend. Any questions on Aussie, where we're coming from? Remember, on the larger implications of where Aussie is, here's the weekly chart, huge region, former swing highs, 52-week moving average, slope support, it's all right here. Momentum basically rebounding right off the 50 mark, more or less. So it's worth, I think, a little bit more of a pop higher if we're able to clear these highs. On a move lower, if you get back below the March open, okay, I probably just want to dump this trade. Okay, and I think the risk at that point would be for a drop back into that key support near 77.30s. So that's the thought process with Aussie. Been a little bit back and forth and overnight, but all things held constant, I think we're all right. I think we talked about this yesterday in the webinar. The other thing we were looking at is the momentum signature. Right, this is coming from oversold condition. 50 held as resistance for a while. You finally pop through 50, and then it offers support on the pullback in momentum with the stretches going well into 70, right? 70. So topping the 60 threshold. So for me, at least from the momentum signature, also continuing to suggest that downside pressure from oversold, maybe alleviating here. Thank you for my yesterday's Aussie trade. I closed my short at 77.85. Right on, right on. Okay, good. Yeah, I remember I was thinking about you when that move, amen, yesterday. Good. Any questions on Aussie before we move off? The only thing I don't like about Aussie dollar, says Pooja, is those 3-wave sequences. I was kind of staring at that yesterday as well. But this is why I don't put added emphasis so much, Pooja, on the wave counts. You know where I come from with that. If there's a readily identifiable 5-wave pattern rather, or readily identifiable correction move, sure. Yeah, you don't like to see 3 waves, but for me, I just have to kind of stay true to what the levels are. And the fact that the 618 retracement of this near-term advance now converges on the monthly open, on former slope resistance, current slope support, I think it's just pretty clean. If you get the topside break, great. If not, we'll have to reassess from there. But you're coming off a pretty big level. And you marked some pretty strong divergence into those lows on the daily chart, if you look here to the left, right? So we'll see, Pooja. I hear you, though. Pooja says, I agree with you on the topside break. Smiley face, hope we get it. Yeah, me too. We will see. Keep in mind also that drop that we just made today, we came basically right into the 100-day moving average, almost to the pip. It's been a decent pivot in price just over the last couple of days. Once we broke below resistance on the 2nd, resistance on the 5th to start the week, nice little support bounce there. So we'll see. Okay, so that is Aussie, number 3. Number 4, also I think, Pooja, you've been following this one as well, the Euro-Yen trade. So I just wanted to give you a quick highlight on what that's doing. The levels that we've been following have been pretty clean. On the on the outside day reversal that we talked about, start off the week, right off slope support, right? This is the 50 line for the current ascending structure we've been following basically since the 2015 lows, or 16 lows, excuse me. That level came into resistance. Again, former swing lows from back here in early February. Very clean pivot in price, okay? And also represents the basic high day close, or the basic high close, excuse me, for 2016 trade. So it's been a level we've been watching anyway. It's 31.70 on a close basis. That's still daily resistance. Intraday trade looks like this. And again, here's what we looked like last night. So Aussie levels remain unchanged, no change there. Here's Euro Yen. And again, we talked about this trade, right? The reversal off support coming into that median line, pulling back. Initial support at 2016 open, 130.69. That's continued to hold. Okay, we tried to make another stab here. Here's the pullback. Basically, you're looking for a more conviction break above 31.60s, let's call it, the median line. Look for continuation, 32.28 and 32.29, excuse me, and then that upper parallel basically is just below the 33 handle. You know, I'm pretty comfortable, at least near term, still looking constructive, basically above 30.15. Okay, it's your weekly open. And 130.06 is the monthly open. So let's see if we can't get that. Again, we even talked about this yesterday, maybe being a 1, 2, 3, 4, 5 wave pattern. So A, B, C type correction, done deal. Could be the play. Look for a move above here to assert back the long side. Questions on Euro Yen? ECB is on tap tomorrow. All the Euro crosses look very interesting. We'll go over Euro CAD in just a moment. I just highlighted the daily chart there yesterday because I want to talk about the significance of the region that we were coming into. But even Euro dollar also, all coming into pretty interesting areas, right ahead of the ECB, right ahead of the NFP print. Lots to look at here. So look to stay constructive above 130.15. Basically, we need to clear that median line to at least get the resumption trade for a move higher, still within the relative confines of this downtrend, right? But certainly a median line break would suggest you got a little bit more to go in the correction before we move again. The other thing I wanted to highlight yesterday was EuroCAD, and this is a big, big region. The 2016 stretch highs get you 160.101. 162 is another median line confluence of a broader upper median line parallel. I'll show you this in a moment. And current near-term channel resistance. This is basically a parallel of basic slope support. So all of that gave you 61 and 62 as basic near-term resistance levels that you need to really be mindful of. We're in deep overbought territory, not the time necessarily to try to fade it, but the time to recognize when the markets are vulnerable for exhaustion. So I think this is a big, big spot in EuroCAD. Obviously, if you do get the daily close above the material break, you're looking for a rip. But at this point, you want to curb any long side expectations. And here's what the daily chart looks like now. This is a modified pitchfork from the advance off last year's low, specifically in February. Some symmetry there for last year's low. And then, you know, the median line's been a decent pivot in price. The 50 line fueled another move higher. And here's the upper median line parallel converging on the 2016 highs, converging on basic channel resistance. So that's 61, like I said, just higher, basically into 62. You get another confluence of the 50 line for this broader formation that we're following and that same near-term slope, right? But, you know, you're vulnerable. You're vulnerable for a pullback here. So just keep that in mind. There's nothing on the near-term approach. I was kind of trying to look to see if we had anything worth noting here on the intraday charts, but I just don't see it yet. So look, you can see obviously that we've marked some pretty radical divergence in near-term momentum on this advance, right? Since last week, price pushed into a new high, a higher high and a closed basis, a higher high and a closed basis. Again, you know, mind the line chart to give you that visual graphical representation, and a series of lower highs. So yeah, the exhaustion is screaming there, but you know, I needed something a little bit more convincing in near-term price before I try to fight this. And, a basic break of a near-term slope, just something to kind of give us so we're not just fighting this advance. There's just nothing clean. There's just nothing clean here yet. So I'm on the lookout for some sort of fade reaction here, but to date, I just don't think we have the justification yet. A good spot to look. Sorry about the silence there. I just wanted to kind of scope that out real quick. A good spot to look. If we're going to see some sort of kickback, this is where you'd start to look for the initial reaction. Okay, and that is EuroCAD. So that's all the updates from last night's report. Previous night, just a couple things that we were going over. Obviously, dollar CAD. We want to talk about that ahead of the BOC. Very similar setup as EuroCAD in that you're coming daily resistance. But what do you do? For dollar CAD, I still have a little bit more room to the upside before you come into anything major. The ideal scenario, again, this is just my humble opinion, would be a spike into the January low day close from last year. A nice pivot range there. That converges on the upper median line parallel, basically like 30.26. One more stab into that region, maybe on building divergence. Look for some sort of near-term trigger break would be the play for me. Obviously, if we break back below the monthly open, which converges on the 50 line there, that would be the onset, in my humble opinion, of a larger setback. Now, what's interesting is despite the big moves that you've seen in the greenback on the adversary side, dollar CAD has largely held its own. I mean, this was a pretty deep pullback that we got yesterday, but here we are still holding that basic range. So heading into the BOC, not really, expect anything mind-shattering or anything new by way of policy changes from the central bank, but certainly that rhetoric always has the propensity to move markets. So look, if we get a stab into 130.27 on a sort of spike high today, I'd be looking for exhaustion there. So that's kind of my line in the sand. Above that, there's really nothing to stop 31.30. But we'll see. So it's either a spike into this region, I'll try to fade, or if we break below 28.29 and you don't have a position on, wait for the recovery and a retest of that to try to press the short again at that point. But right now, you're mid-range for the week, and I wouldn't be necessarily jumping into a position just off the cuff right ahead of that central bank rate decision. Here's what it looks like on the intraday charts. Here's what we look like earlier in the week. As we opened up, this was Monday's update. We were talking again about that 30.26 level is a decent area of support, of resistance we look for. That touch of the median line or the upper parallel was actually the high. We pulled right back. Here's the weekly open, which we noted as support as the initial pullback, 128.78. And that's basically where we landed out yesterday. Saw a little bit of a bounce here. So, could still get that last spike. Ultimately, it's a break below 28.28. I think that would open up that decline towards basic channel support. Okay. So again, you're mid-range for the week. Don't fight anything from here. Look, see if you can't get another failure towards the highs or a break back below this seller rally, targeting 127.23. Any questions on dollar CAD? Okay. keep the BOC on tap. It's going to be at 10 o'clock today. So right after the conclusion of this webinar, right ahead of Jamie's webinar, keep that in mind. So Aussie yen is what I had up next. So this 6, number 7 is Aussie yen. I don't really like what we're doing right per se here. But I still do think it has one of those propensity trades that it could travel higher. Now this goes again against what we're looking at with dollar yen, right? If dollar yen does break lower, that's yen strength. Certainly we're long Aussie, so we hope it breaks higher here. So I kind of wanted to put this as an offshoot. Okay, this is one of those trades where if we do have an adverse move against us in the Aussie dollar, this might be the one where you could play in the opposite direction. If that materializes. So I'm going to drop this extension here at this point because we've made a new low, but the basic premise range of resistance did hold. That was 83.13 to 83.37. Here's what Aussie yen looked like, basically it's earlier in the week. On the advance, it was the 50 line. Then we talked about 83.13, 83.37 as sort of our near-term bearish inval. So we came right into that, held as resistance and pulled back. Now, is this the same as Euro yen? And are we going to break higher? Well, if our outlook on the Aussie does continue to hold, then yeah, it would suggest that this probably has a break higher before you start to move off again. At the end of the day, you didn't quite get the same outside day reversal that you did in Euro yen. So the signal, in my humble opinion, isn't as strong. But on the daily chart, you're coming into basic resistance, 83.37. This is why this was our bearish invalidation level, because former slope support, same parallel, 1 touch, 3 touch, 4 touch, break, should be resistance now. Okay, and that's sort of where the advance fizzled out. So this is your focus range right now. That's why I'm taking a little bit more of a side seat, on Aussie yen. Don't have anything on this now, and I kind of don't know how I want to attack it. So especially because I already have exposure on Aussie, I kind of want to sit this one out and see how yen starts to react as we get closer to BOJ and NFPs. Kind of an objective way to look at this. Is this support, break, and we're checking as resistance, and you look for another dump? I don't know. I'm not really stressing this slope, but it does converge on that same resistance range we've been watching anyway now. So we'll see. Don't make any harsh moves here on Aussie yen just yet. Okay, number 8 is Euro Kiwi from earlier this week as well. Here's what Euro Ki looks like. Key range still holds. 170 is support. 171.13 is the major sort of resistance barrier. That was what we started the week looking at. So you did get a dump and a push lower, but we're basically still holding that key range. Here's what Kiwi looks like. Euro Ki. Right, saw a little slip below there yesterday, but we're still in to hold it. I'm willing to put that as now the weekly opening range low, your Monday, Tuesday stretch. And basically you're looking for a break of this near-term range to give you conviction on a play moving forward. Levels remain unchanged. The high day close still at 72.58. That's kind of the major stretch if you do break higher. Your near-term bullish inval still at the monthly open at 69.30. So no change there. Any questions on Euro Ki? Levels unchanged. Okay, last but not least, for this last update was the gold trade, and this one kind of made a big outsized move yesterday. Okay, so the basic premise, we opened the week talking about the fact that gold basically had made a pretty strong reversal last week off of a big support barrier, and that was 1301, 1302. So the fact that we closed almost on a doji there last week, put the low day close at 1366, we wanted to stay constructive while above that, there's a 1366 level. And this near-term downslope really gave us a convergence right here at 1332. And a break there is what I want to see to kind of validate at least a sharper move higher here in gold prices near term, targeting 1339. So, well, let me just show you the chart. You basically got that, okay? And the topside break fueled a rally into 1339. Here's a nice little ascending channel formation that seems to be in play. Looking for support basically at 1330 now here. Okay, I'm going to go ahead and reset this for you. Get rid of that 50 line. And I want to see what this retracement looks like near term. There's that 38.2 converges again. And at this point, the 618 of the near-term advance also converges on what level? Again, the low day close, 1316. Monthly open is at 1318. So it's a beautiful, beautiful setup as far as what levels we need to really preserve. Initial support, 1325, that's what needs to hold. With our bullish inval at 1316. If you break back below 1316, you're likely to see this thing dump right back into that key pivot zone that we reflected off of last week, and that's basically the 13 handle. All things held constant, we're looking for support, possible exhaustion, long entries on a move into 1325 for now. So look, gold is going to be of extreme importance this week because of two main factors. Okay, you got a lot of things that are tugging at the gold market right now. A, it's the expectation of what's going to happen with rates. B, it's the threat of what's happening here with these tariff talks, with just the geopolitical environment, right? So if we get strong wage inflation numbers, markets will start to think, okay, there's a higher likelihood of 4 rate hikes. If that Fed interest rate expectation moves forward, that's likely going to put pressure on gold, right? If it comes out weaker than expected, actually that might actually help gold because that interest rate expectation will be kicked out. The Fed will have a less sort of incentive to start to tighten more than it perceived. And that could help gold prices. Also, on the flip side of that, the other side of the sequence that's pulling on gold prices back and forth is whether you're going to get some sort of larger global trade war. And if that does materialize or metastasize based on these tariffs, then that actually would also be a supportive trade in gold. So if the breakout is legit of this formation we've been following from the highs in January, okay, here's your January and February highs. If this is legit, price should hold above 1325. That's the basic premise of the trade here. So I think it's going to be an important couple of days here for gold, especially as you close out this week. On the whole, gold for the weekly charts has been holding a very clear-cut, well-defined yearly opening range. Here's your yearly open. Your high came in right at the 2016 high day close. Your low, again last week, inflection point right off the yearly open. And for the first quarter, you're basically setting a beautiful monthly opening range. Yearly opening range. Questions on gold or any other questions or trade setups you guys want to review? I do have just euro left. Something also we've been following very closely. Here's what euro dollar looks like. Well, I guess let me show you first the weekly chart. So, obviously the DXY, we talked about that and what that's doing, heavily weighted the euro. We talked about this chart yesterday, so I don't want to go over it again, but your key critical levels, 121.67 is still your broader bullish inval for this immediate advance. 126, 125.98, major target that we're still looking for on an upside approach here in the euro from the weekly standpoint. Okay, this is 618 retracement of the 2014 decline. So the uptrend for gold still intact in the meantime, right, Eman? Yeah, let me go right back to that. So in my humble opinion, the broader uptrend in gold, yeah, nothing's changed. Nothing's changed. This large formation that we've been in for, 5 years plus now is still constructive. The yearly range, though, Eman, the yearly trend since the open of 2018 is range clear, cut, and simple, a well-defined range. Okay, if you get into the near-term charts, the closer near-term charts in gold, this uptrend, is this what you're asking? If this near-term uptrend just from last week's low, I would still stay constructive above 1325. Okay, the thing that would make me straight bearish, man, would be a break below 1316. Not my favorite scenario, but I think at that point you need to completely give up and look lower in gold prices. But for me, I'm constructive above 13.25. I'm only bearish below 13.16. Does that make sense? Okay, got it. I hope 12.16 holds. Yeah, I honestly, again, just my humble opinion, Eman, 13.16. Yeah, I knew what you meant. You wrote 12.16. In my humble opinion, again, I think it's a prudent call. The reaction he got down there last week, the fact that the monthly open is right in that range as well. And with what's going on just in the broader risk markets, I mean, obviously, again, like I said today, you're seeing, we're pretty heavy ahead of the open. It's a good reason to believe that both the fundamental and technical factors, at least near term, are at least supportive. So we'll see. But man, hope that helps on gold. For as far as the euro is concerned, so we went over the weekly charts. Here's what the daily chart looks like. And an immediate level that we're looking at right now is the 2018 high day close. It's also the outside day reversal that we made back here to start off the February trade, or mid-February, basically on the 16th. And we struggled there yesterday. We probed through, but we didn't close above. And here's another attempt here. So for me, near term, I'm worried that you get some sort of near-term pullback in the euro. But for me, the outside day reversal we made off support, off that 2167 level that we noted on the monthly charts, or on the weekly charts rather, has me looking for the stretch higher. Perfect rebound right ahead of 40 in the momentum signature from overbought conditions continues to suggest the upslope is still in play. Immediately here, Eman, no one asked about this, but anyway, immediately here, you could get a little bit of an exhaustion play. So look, I'm going to clean this up a little bit for the sake of clarity. You don't need this anymore. Kind of looking to see how we react at these levels, and your focus needs to be on the near-term slope. And here's what we're looking at. So, the play last week was to look for exhaustion into 2172. Both of those levels were areas of interest for exhaustion / long triggers. So, here's what euro looked like to start off the week. And we were looking for an ultimate break above 23.55 to give us that stretch into the 2018 high day close. Also converged on the 618 retracement. That's what we're pivoting on right now. You know what I mean? This was the target on the long. We pushed through, and you can see that slope has been pretty radical resistance. Reversal candle. We're now just sitting on basic channel support. Now, it's only a 2-point touch, so I don't want to stress these slopes. As I always tell you, the steeper the channel, the less emphasis you want to actually put on that kind of play. And plus, it's only a 2-point touch. So look, it's a clear pivot in price. And in fact, the closer you look at it in price action, you can see sort of resistance. Now that we've broken above it, it's been support. And you look for some sort of reaction here. At the end of the day, if we break lower, you're still constructive above 23. Even if you dump down as low as 23, former median line resistance could be a simple break of resistance, check a support, then move off. Ideal scenario, we hold here. And we just, continue up higher into 24.70, 25.38 would be your next subsequent upside targets. But that's sort of my game plan here. Don't have any positions on now. As I said, this was kind of the target on the long side. Now, a pullback into support here would typically have me looking for entries again. But I just don't have anything conviction here necessarily near term. There's not even a slope or a trigger on a near term that could put me on the long side. It's been a very meticulous kind of seesaw trade. So I want to see how this pans out. Ideal scenario, you basically see this low hold that we made last night in Asia and look for a stretch higher near 24.70. Might be wishful thinking, but that's sort of my ideal scenario. Questions on euro. Levels unchanged from here, basically sitting on this support. The only level that I added was the 786 retracement at this point. And that's 24.70. All right. That is number 10. Okay. Any questions or other trade setups you guys want to review? Feel free to throw them on the message board. If not, remember we got Jamie on tap. I don't think we rescheduled it this week, as far as I can tell. So you should be on tap at 11 o'clock with the midweek strategy webinar to go over some of the more longer term swing trades, broader picture trades that we're looking at. Look, use some caution, guys. Stay nimble. We still have a lot of event risk on tap. Like I said, the BOC later today, ECB tomorrow, non-farm payrolls and BOJ to wrap up the week. So hopefully that offers a little bit more of a or continues to fuel, rather, we should say, this little bump in volatility. If there are no other questions, we'll go ahead and wrap it up there. Best of luck trading, guys. See you tomorrow morning. Cheers.